Well, what do you know? Is KIO macro with JT and Isaac Joe. That's terrible. I'm just going to be regular.
What'd you call me?
Isaac was like, man, we need an intro. And I'm like, I tried to come up with something a little savvy, a little razzle dazzle, but it was
called Isaac Joe?
Yeah, I don't know, man. I'm editing it. I was looking at this Trader Joe thumbnail, so it might have subconsciously came.
I pictured a guy with some overalls and a straw hat who lives in a white trailer in Tennessee.
Sounds kind of dope, actually.
Anyways, guys, we're live. Another KIO macro, just going to come at you with our updated views of the markets. We're going to go over some more Bitcoin ETF data, keep you guys updated on the inflows and the outflows. And I'm sure JT and Isaac will have some interesting things to share as well. How you guys doing today, man? How was the weekend?
Best time.
Nice.
It was good.
Oh, man.
Nice.
Oh, that's it. Okay.
Y'all been on that short response.
No, yeah, mine's good. No, I'm joking. But no, it was pretty chill, man. The weather is pretty great today too. So I'm a man of the sun. So whenever it's sunny, I love it.
That's what's up. That's what's up.
Yeah.
All right, I'm gonna share my screen. Let's get into it. All right, not much change here. Just gonna run through these real quick. Still consolidating. Look like there's a bit of an uptick there. Gold still doing the same thing. The S&P is at a new all-time high, which is insane.
It's not even crazy at this point.
I know it's still crazy, but it's not. It's like, wow. The Dow, same thing, brand new all-time highs. I just wonder when things are going to start coming down. Like, I thought we were going like
never.
Never. We're going up forever, bro.
We're going up forever. You'll get tired of winning.
It seems
the soft landing is here. We will never have a hard landing or recession again. And yeah, everyone will just make money forever. So yeah, we're good.
Because I was thinking that. I'm like, man, no, I'm just playing. Apple at all-time highs. Everything is just kind of pumping. You got, Coinbase has dipped a little bit. Bitcoin, we thought we were going to see a more sustained drop. But if you look at this candle, it's a monthly candle. When you see candles like this, if it closes like this, I'll be willing to bet that we'll break down. But I want to wait for the candle to close here. This week? It's going to be February on Thursday. And then you got ETH candles looking the same way. Like once the market starts to turn, you normally see these large wicks, like you did here, like you did here, like you did here. So just going back to my candlestick studies back when I used to trade Forex, another long little candle here. But we just have to see how they close. I could go back down to the weekly. Yep. You see those? That means the bears are like coming in strong. They're not letting it get above this level here. So the longer it consolidates there, the higher the likelihood that it'll start to break down because the wicks are longer up top than at the bottom. And then you got stablecoin liquidity ticking up, which is showing that people are getting a little bit more into stablecoins. Same with USDC. And, altcoins are just doing their own altcoin thing. They kind of have a mind of their own. But I want to go over a little bit of Bitcoin ETF data here. We showed you guys the chart from Capital 15C on Twitter last week. And, he basically shows the reality. Like a lot of people are just focusing on the inflows, but they're not focusing on the outflows. So if you see GBTC, or grayscale, we'll call it for short, even though it's longer, I guess. For some, you can see that it's only been consistent outflows, right? So total, and like I said, like we said last week, people are selling grayscale to buy these other Bitcoin ETFs. Is not shown on here, but the fees are much smaller. Like the fee for grayscale is like 1.5. The other ones are
approximately 8 to 10 times smaller or lower.
Yeah, which is pretty significant, especially if you compound that. So out of all the ETFs with all the hype, there's only been an additional 17,571 Bitcoin added because people sold 122,607 Bitcoin out of grayscale and cycled it into these new products. And that's why you're seeing these new ETFs with higher inflows. But the net isn't that 17,000. That ain't nothing. That's just a few retail buyers, in like a normal market without the ETF. And people always look at without the grayscale buying, which is kind of skewed because then it just looks fantastic. But that's not the reality. And like we've been saying for the past few weeks, if the trend continues like this, Bitcoin I feel like has to drop. And that doesn't mean like all doom and gloom, because we still think we're going to see a bull market this year. But, you know, we do feel like, or I feel like a healthy correction is needed to get that fear back into the market. People have been excited for a long time now. So I just think we need a little reset before it's off to the races. Did you guys want to talk on this at all, or can I take it down and bring the screen back up?
Yeah.
Yeah, what?
Yeah, I want to talk on it.
All right.
And yeah, that I want you to take it off. So
Okay.
no, I actually think at the end of the day, it's still a good thing for, I guess, just Bitcoin, but for the space in general. As I said, like 2 or 3 episodes ago, it's just going to take time for the products to mature. And I don't mean it mature from the standpoint of, you know, the investment coming to the end of the term or being sold. I just mean growing from a nascent industry to a more mature industry. And these products now, more idiosyncratic, have to go from a nascent product to a more mature product, which then that will attract the money that the space has been looking for, trying to suck in since inception, essentially. So overall, I don't think it's a bad thing. As long as we continue to see positive inflows, I think it's an overall good thing. Short term, who knows, but long term, yeah, like I said, once it matures, the money that's been sought after will start to enter the space as it matures.
Man, so like markets are interesting right now, guys.
We are screwed. We're going towards oblivion here. And I'll tell you what the catalyst is. It's going to be China. China is the catalyst. Have you been watching U.S. Treasury bonds or U.S. Treasuries in China? Have you been seeing this?
U.S. Treasury demand, or like the flow of them?
The flow of U.S. Treasury, their holdings, their stockpile is diminishing.
Yes, yeah, actually.
The largest, or I think second largest after Japan, holder of U.S. Treasuries in the world. Yeah. And now they have dropped their stockpile by 40%. And why? That's the question. Why?
Yeah, and slash letting them mature. Yeah.
I think we all know the answer. The yuan, or renminbi, as some call it, is not doing well currently. China has been selling these treasury bonds and buying their own currency in order to prop it up.
And so effectively, that's what is meant by China is selling deflation.
Exactly correct. That's their war chest in case of economic calamity. But the reason why is because China is sitting on a massive debt bubble right now. It overproduced too much housing, which is
China has been in a debt bubble for like 30 years, though. Let's also keep that in mind.
Well, it's been in a debt bubble, but now it's the demand is no longer there. Like it's overstimulated its economic growth, and it now no longer has the markets to sell to. And they failed at becoming a developed country because they never built a domestic consumer base.
I was going to say, it's funny that people still think, as you're saying, that China somehow is going to dethrone the United States. Because everything you're saying is 100% correct. But anyway, China. Fuck. Sorry.
God damn it, man. Come on.
This is just like a disaster.
And I'm not okay, let's get ready.
Okay.
But anyway.
All right, here we go. All
right, let's do it. Yeah, and on top of all that. But anyway, guys. Yeah, on top of all that, you know, one of the like clearest physical indicators. I don't know what this is so funny.
What, man? What are you
that's just crazy, but one of the clearest physical indicators of China's situation.
Fucking wrong with this.
On top of all that, one of the clearest indicators of China's situation that you just described is the fact that they have 140 million vacant or unoccupied units of real estate just sitting in the country. Like that's half of our country in terms of population. Damn. That's pretty insane, man. And so that's literally, that tells you how if you only saw that aspect, that should tell you how China's economy is doing. Yeah. And keep in mind, the whole exporting deflation thing, they have to export deflation or else they would be in a dangerous deflationary cycle based on their policies / the lack of demand over the past decade. So they have to, they're in a position to where they're kind of forced to sell our bonds, U.S. Treasuries, in order to keep their currency alive at this point.
the whole real estate thing. I saw something regarding Evergrande today. I didn't really look into it, but did you guys hear anything about that?
It's being liquidated. They overproduced housing. The Chinese economy is essentially based around the development of housing and of land value. And if you look into how China collects taxes, it's all based on land value and also expected land value. So like when we were seeing things about, you know, these ghost cities in China and stuff, those are all development projects to increase the value of land that also allowed for China to increase its tax revenue. So basically after, you know, decades of this like kind of overdevelopment, they're now kind of screwed. But their system only made sense and they could prop it up if they were exporting at extremely high levels. And the reason why is this: their currency would have been kaput a decade ago if they hadn't had really extensive currency manipulation in place. They manipulate their currency by essentially using dollars to buy their own currency to prop it up. And then they sell their own currency into their own dollar reserves in order to deflate it, you know, when they want to bring it down, and it makes their exported goods more competitive when they deflate their own currency. So they've controlled it through these dollar reserves, but they only get those dollar reserves by selling goods to the United States. Like that's how they maintain a sufficient war chest. But as their debt bubble seems to be unsustainable at this point, and they haven't really recovered since COVID, and they haven't been able to develop a domestic consumer market, which ideally would be able to balance out these issues so they wouldn't be so reliant on external markets in order to, you know, control their currency. They're really in like a fuck situation. Like they don't have the war chest, the dollars, to sustain this forever. And when they run out, their currency can't be propped up anymore. So it's the only thing that's keeping their currency from just, you know, inflating into oblivion, and then they'll have just a real bad situation on their hands.
That was good. That was a great clip. I already see it already. That's gonna be an easy one. Should we move to US real quick?
Yeah, go ahead and talk about something.
Here, you want to like segue us into the US? I guess I'll segue us, and then one of you guys can start.
If you're going to speak, it's probably better if I segue and you start.
Well, one of you guys can easily start, and I can just bounce off you either way.
Well, I don't even know what you're going to bring out.
Okay, I'll segue right now. You ready? You ready? All right, guys, so that's enough about China. What about the US?
Oh my God.
All right, now you go. Now talk about the US.
Bro, it sounds like we are hooked on phonics.
I swear, bro.
All right, so we talked about China. Like, let's kind of get back to the US a bit. I really tried on that one.
Bro, I got it, bro. And
all right,
never mind. Let's just, because I was literally about to say enough about China.
What if one of us says in perfect Mandarin, okay, enough about China, and then in American says, let's get back to the US?
So I'm gonna go on Google Translate. Guan Yu, Zonggong, Di Shinju, Shou Jim, Dule, Reng, Women, Dao, Megwoba.
That sounded pretty good. I don't know if that's good, but that was pretty good.
It was. He said, that's enough about China.
But all right, let's get back to the US for real.
Yeah, come on, guys.
Are you guys familiar with Nick Timiraos?
No.
He's a writer, and I would say he's a Fed watcher, but he's like #1. If he writes something in an article about the Fed, everyone's reading that article. Everyone's talking about it on their outlets, alternative outlets, and, as well as mainstream. But anyway, I'll sum up the most recent article from 2 days ago. So he essentially thinks that the Fed thinks that real rates are too high. And this goes back to our conversation from like 2 weeks ago when I brought up the 2 reasons that the Federal Reserve could cut rates. And one of them being is that they want to bring the real Fed funds rate down. And so he thinks right now that they believe that rates are too high and they won't cut tomorrow. So by the way, there's a FOMC meeting starting tomorrow, 30th and the 31st. So he doesn't think he thinks they're not going to cut or hike. And he thinks they're actually going to abandon the rate hike narrative officially tomorrow. I actually agree with most of that because it makes no sense to really do anything. You know, if you really just go through the most recent data excluding housing right now, mainly inflation data. So The latest CPI print year over year headline was, I'll just go core. The core was up 3.9% year over year, which is still super sticky. And the PCE, which is what the Fed prefers to look at on the core, came in at 2.9, which is pretty good. That's under a 3 handle. That's like the first time in a couple of years. And on a 3-month rolling basis, that same number is looking at, 1.9%. And the trueflation number, I always look at trueflation anytime I'm referencing a CPI or PCE report. Trueflation has been sitting at 1.8% consistently for the past month or so. In the labor market, it seems like he's accomplished his goals in terms of getting softening from the job opening side of the labor market versus the unemployment side of the labor market. And so all that equates to, it looks like you've achieved a soft landing. And so now all you need to do is sustain where we are now, let the data play out, and make your decision from there. Now, it's a weird one because it's still hard for me to truly believe that this soft landing is going to stick the way it is, right? But I'm also in the camp that housing is not going to crash at all. Prices are going to keep going up. And it's hard to see a recession without some downturn or correction in home prices. But at this point, I'm starting to think that there's a possibility we can get some recessionary activity while housing is still to the upside. I don't know how it's possible, but it feels that way. So yeah, I guess I'll stop there because it seems like, I remember we had a debate early on, Isaac, soft landing versus hard landing. And it seems like we have achieved the soft landing.
Yeah, I mean, it sounded ridiculous back when we were discussing it, which I think is kind of funny.
I wouldn't say we achieved it until they lower rates and the market doesn't crash.
They don't need to lower rates though. Like, what are the historic rates? Like average rates? I think that we're still at it.
To lower them a little bit.
So I guess the only reason you have to lower rates is because of how much we've been fed in terms of new loans, new credit at zero rates or super low rates. And so in order to avoid financial ruin for a lot of institutions and companies that will have to refi and let debt mature at a higher rate, you're going to have to bring nominal rates back down. And I think real rates are going to just be more in focus going forward. I've been looking at real rates now, or putting them in my focus now for the past month, just because, if we don't have a recession, I'm never the type I don't care if I'm wrong. At the end of the day, I look to see where the market's going. So I'm never confused, and I don't make the wrong decisions in terms of what investments I'm potentially making or not making because of the data that's out. But anyway, the point of all that is they need to lower rates because you said we don't need to lower rates. And I would say we kind of do need to, just because once you look more granular at a lot of these companies, especially just in commercial real estate, if we stay at this restrictive level, they will be extremely hurt in terms of their debt load. But also, even on the fiscal side, just our debt service. By lowering rates, we don't continue to add more pressure on the fiscal deficit side, just funding that. So if we stayed here, and that percentage of what we pay towards our debt service will continue just going up, even if we stayed the same, because overall debt is always going up. So, we're in a position to where we literally have to cut rates some, at least, but we can't go back to the zero bound. Because if we go back to the zero bound, a decade, 15 years from then, we'll be in a position like this times 10.
So do you guys think that when they do start to lower rates, the markets will drop? And do you still think we'll have a soft landing? Because, we've been talking about like, they have to lower rates because they're saying something, because that indicates something's broken. But nothing's absolutely broken yet. They start to lower rates. It's like, will the same thing happen? Like, what do you guys think about that?
A lot of people think markets will shoot up. But yeah, I think when they start cutting rates, even if it's for the sole fact to bring real rates down, I think markets will be spooked in some way at first into thinking that, well, they're cutting rates for what? And they're going to lean towards a negative reason. And so the market is going to take a little hit. And that's where I can see that soft landing narrative kind of breaking. But also, like I said, you know, housing is going to continue moving along strong, and demand in housing is just picking back up as well. So like all those states that saw negative price declines, pretty much they're all back in positive territory year over year. And it's not like at some crazy number. We're talking about 4 or 5%. So that's kind of sustainable in historical terms. And so if we look at it from that standpoint, yeah, there won't be a recession, but I'm still in the recession camp. It's just that everything right now, I'm fully aware that it looks like we're good to go. But the fact that the market has priced in this soft landing, I don't know. The market hasn't really been right on much in terms of much. So I guess, as I always say, we shall see.
We shall. Any changes to your portfolios? The only change I've made is, like we said last week, I took a little bit more profits on Pendle because Pendle has just been ripping. And we started to build a position in maplefinance. You guys give this maplefinance video a watch as well. Have a lot of reason to believe that it'll 100x current price levels in the next bull market. But other than that, I just been chilling, yield farming. You guys make any changes? Or do you see any opportunities that you got on your radar that you may act on in the short term?
I've just I purchased some more Bitcoin when it dropped down in like the last week here. Yeah, I mean, I think that there's good long-term value to this ETF. I think that any drops that we're seeing are likely going to be very temporary. I don't really see any sustained downward pressure, at least not in the long haul, like in the long haul. So yeah, I'm just throwing in some there, a little bit into like Ethereum too. Should have like a higher beta. But other than that, I think that's mostly what I'm working on now. I do expect if this China thing gets kind of out of hand here and we see a drop in productivity from China, like if they enter into a recession, which I think they're already probably in a recession, we could see prices go up again as Chinese production drops. And it's already been dropping. A lot of people are already reevaluating how much they're selling to China and such. So that will affect markets in the long haul. And yeah, I think other than that, though, I don't really see a whole lot. Maybe if like a big conflict happens, we could see a drop in the markets or something. I know that Iran just fired a missile at a U.S. base and killed 3 Americans.
Wait, what? They fired a missile?
Yeah, I didn't know if we was going to talk about that today.
Oh, we can talk about that briefly, perhaps.
Yeah.
Well, okay, guys, don't worry. We're going to be okay. But Iran just fired a missile and killed 3 Americans.
From where? Where did they fire it from? And where did it hit?
So it was a
in a U.S. base that was in Iran.
No, in Jordan. We don't have any bases on it.
Oh, I'm sorry, in Jordan.
So the Hashemite kingdom of Jordan, which is the Hashemites were the ruling dynasty of most of southern or like the southern Levant, and they were allies of us against the Ottomans in World War I.
That was a great story. Isaac, you froze, bro.
Basically, America has military bases in Jordan, ostensibly to fight against ISIS. Iran has multiple Shia-backed or Shia militias that are in Lebanon, in Iraq, in Syria, and in Yemen. The one that's in Iraq, I think, is called Islamic Resistance, but I don't think they're the ones that fired the missiles. They've been firing missiles at U.S. bases for like weeks now. But a missile fired, I think, by Hezbollah just killed, or by a Hezbollah-like affiliate, just killed 3 Americans. And Biden said tonight he's going to be issuing a order of retaliation. You know, he's going to be implementing some sort of plan to retaliate against the Iranians. Now, is that going to be direct attacks on Iran? Maybe. Or is it going to be attacks on this specific militia group that Iran backs? That might be that. If it's the latter, that's not that crazy. You know, that's probably not going to affect much. If it's the former, Iran is currently in a position where it could seriously hamper oil exports to the rest of the world if it wanted to. the Houthis have been doing a pretty good job of preventing exports out of the Red Sea, which accounts for, I think, like 12 to 13% of all trade passes through the Red Sea, nominally to the Suez Canal. And a large portion of oil comes out of the Strait of Hormuz. Iran could block that because that strait is directly on their waters. So if Biden tomorrow issues an escalation of attacks, particularly targeting Iran itself, watch the oil markets as well as trade more broadly when we're talking about the Red Sea, because we could see Iran implement their, their Hail Mary, so to say, where they block both the Strait of Hormuz and they also block all oil exports and trade going through the Red Sea, which would drastically impact the price of oil in a similar level as we saw in like the 1970s.
Embargo level?
Yeah, because it would essentially be a embargo. It wouldn't be an embargo like OPEC did it, where it's like a mutual agreement, but it would be a coercive embargo where Iran just fires so many missiles that you can't reasonably get shipping containers out of the Strait of Hormuz, which connects to the Persian Gulf. So reasonably, you will not be able to get oil exports out of the Persian Gulf. If they close down the all exports coming through the Strait of Hormuz, then that means that up to 32% of all crude oil production could be prevented from reaching global markets, which would be, that'd be pretty on par with the 1970s when it comes to the ability for Iran to embargo oil exports. So we'll see. We'll see how things go.
So
Isaac, I got one question to ask you.
Yeah, what's up?
So if you've known this man for a year, you don't got nothing else to ask him but one thing, that's fucked up. I'm just
I'm not even gonna answer now. I can't believe this.
So Kathy Wood,
yeah,
a couple of weeks ago, she came out with a prediction for Bitcoin. And I asked Vince about this already. Prediction for Bitcoin to hit 1.5 million denominated in US dollars by the year 2030. Give me your thoughts on that. I agree.
Do you feel cool now?
Wait, 1.5 million you said?
1.5 million.
Yeah, here's the thing. I've seen this like exponential curve where they're like, see, it keeps on going on the exponential curve. Here's the thing about exponential curves. They're never actually, outside of theory, actually exponential. Like they always do have like a cutoff, like you'll see like, but like, microprocessing, it's an exponential curve. And then then we'll see it, it'll break down and then it won't be as exponential. We'll have to refine the numbers to make it so the growth is not quite at the level that we previously put it at. So no, I don't think it's going to reach that high because I'm assuming she's using the same like exponential curve that I've seen used a few times to predict the price of Bitcoin. And she's like, oh, if you follow the curve.
Hey, Vince, now I feel cool. So,
Are you talking about the stock to flow model from Plan B, Isaac?
Oh, yeah.
Okay. Yeah, that was invalidated in the last bull market, I feel like.
No, I agree with that sentiment. Vince said he 100% thinks it's going to happen. He agrees with Kathy.
Say 100%. I said I
would.
wouldn't.
You believe that 100%?
Bro, he likes Kathy Wood a lot. Like,
if you extrapolate like how the price has been increasing and then you throw on top of it like an ETF and institutions will eventually get in, I don't see no reason why not.
By 2030 though. She literally put it, if there was no timeline on it, I couldn't say anything. There's a timeline on it. Now you can open it up to scrutiny.
Yeah. In like the long arc of history, I could see it occur. 2030. Yeah. So you're telling me, hold up. You're telling me that in 6 years, my Bitcoin is going to be worth, was it 1.5 million?
That's per Bitcoin.
Yeah, per Bitcoin? No.
It'll be, I think, close to it. It might not get up there, but I feel like it'll be close. I forgot the math that we did and what we came up with.
What is that from here? Is that like 12x or like something like that? 20x? Something like that? Anyway, I can't see it. As I explained to you a couple of weeks ago, I think the scarcity aspect, that doesn't come into play for a long time from now. And I think that just based on demand, it just doesn't make sense because her whole argument is basically based on the fact that it's a big idea that has inherent scarcity. That's pretty much it. And like I said, the last Bitcoin won't be mined in what, 2040, something like that. And so we haven't gotten even close to that like threshold in which scarcity comes into the price discovery itself.
Oh, we've been there, man. Like, what is the percentage of all Bitcoin that's been mined already? Like, most of it's been mined already.
That's a cliched statistic. If that was the case, Bitcoin will be higher than it is now.
No,
it's not priced in to the point where at some point, and I can't speak to the exact number, but at some point, scarcity is going to have much more of a weight on the price of Bitcoin than it does now.
So as of December 6th of last year, there are only 2.2 million Bitcoin left to be mined. There's over 3 million that's lost. The rest is in circulation. It's not that much left if it's only
2140. We still got a long time. Can't forget about the time horizon. And so even though there's 2 million left, that 2 million is going to take a long goddamn time to be mined.
But that's not the point. The point is that.
But that's her point, though. That's literally her point. By 2030, because of the fact that it's a big idea and the inherent scarcity aspect, 1.5 million per Bitcoin by 2030 is pretty realistic in her eyes.
We'll see. We'll see. JT,
let us know what you guys think in the comments. If you're a 1.5 million Bitcoin predictor, you might as well just go ahead and buy all of ARK Invest ETFs. Make sure you listen to all of Kathy Wood's recommendations on stocks to buy and listen to all of her advice. And I promise you, you will not be up in 3 years.
Wow. You promise that?
No, I don't promise that. But I'm pretty confident, even though I love Kathy Wood, by the way. But man, you can't deny the objective information that is there. Look, people see what they want to see. What I see is all that's there.
And what's there is what you want to see too. No, I'm just playing. Guys, I think that's it. We covered a lot here. We thank you guys for tuning in. If you guys want to become a better, more well-rounded investor, click the link in the description and book a free strategy session. Talk to one of our team members. We'll see if our program is a good fit for you. We teach you how to yield farm, how to conduct fundamental and technical analysis, how to navigate securely and not get hacked. Literally everything you need to know. So if you want to be a part of a elite mastermind of people who are like-minded, trying to create wealth in crypto, and just be a part of history in the future and the technology shift, we love to hear from you. But with that, thank y'all for tuning in. We'll catch y'all on the Flippy Hippie.
See you on the next one.
See you later.
Bye. Have a good time.